Here to discuss that curious and perhaps symbiotic relationship, as well as other topics, Steve Lonegan, Director of Monetary Policy for American Principles in Action. Steve joins us from Newsmax, New York. So, Steve, there you are in close proximity to Wall Street. Why is it Wall Street reacted so beneficially, and yet you criticize the Fed's decision?
JD, that's a great question, because you're right. As I'm sitting here at this moment, Wall Street's continuing to rally. We're probably going to see all-time highs by the end of the year. And that is a direct response to Janet Yellen's statement. And right there is the problem, is that the statements of one single central banker can have so much influence on our financial markets. But at the heart of this is still an underlying issue that we cannot ignore, JD, and that is that the wages of the average income household in this country, lower income Americans, is staying stagnant. We had one good month of reports this month. That's not a trend. And the fact that we're continuing to see a widening income gap. Hey, look, I'm thrilled to see my own portfolio benefiting from today's Wall Street rally. But you still have fundamental issues here. And that is this Federal Reserve Bank chairman's statements are so profoundly impactful. This wasn't the way it used to be. And when you're working in an economy where the statements of one person can have so much impact, that's a dangerous area to be in, I believe, and so do many others.
And it's nothing new. We can remember Alan Greenspan criticizing irrational exuberance years ago and then a downturn on the market. So the bottom line, seems to me, you're suggesting, is not so much personally, but structurally, and the whole notion of what the Fed is and what it does in terms of our currency.
Yes, it is, very much so. What we need, JD, is a sound currency that everyone can believe in. You know, if you look at the average household incomes of Americans prior to 1971, when Richard Nixon ended the sound monetary policy of the gold standard, from World War II till 71, everyone benefited. You had the golden age of the middle-income wage earner. The average incomes of poor, middle, and upper-income people went up 85%, adjusted for inflation. 85% in that period of time, from 48 till 71. Since 1971 until now, we've seen a widening income gap, and we've seen the wages and the incomes of lower income wage earners remain stagnant for 41 years in a row. Today, the Fed treats lower income, when low and middle income wage earners get salary increases, they call that inflation. That's not inflation, that's prosperity. Where we want to see a sound dollar. Now, JD, several weeks ago, on November 14th, in a startling new move for the Fed, Janet Yellen met with representatives of the far left, liberal special interest groups, very liberal special interest groups who want to influence monetary policy. They've said it openly. She hasn't met with representatives of the center right, with groups like American Principles in Action, or other friends at and many other groups who would like to meet with her.
And obviously, she ought to meet with everybody, those on the left, right, and center. Want to get to something in the minute and a half that remains. Earlier this week, Peter Schiff was on this program. He had some interesting predictions. Steve, take a listen, then I want to get your reaction.
United States and the U.S. outlook, that the decline we have seen.
That right now, Steve, and I don't want to. Okay, apparently we do have it now. Let's take a listen.
If you remember, oil prices dropped from about $150 a barrel down to close to 30. So it was a much bigger drop to much lower levels. And sure, it was a benefit for consumers, but it was also the beginning of the 2008 financial crisis and the Great Recession that ensued. So I think we can enjoy cheaper gasoline, but I think, unfortunately, it's probably a harbinger of another recession.
45 seconds, Steve Lonegan. Do you share the perspective of Peter Schiff on lower gas prices being beneficial to consumers but leading to another recession?
I think, yes, that we are leaning into another recession. Wall Street is booming today, but we all know that's not going to last. The question is, how are we going to deal with it in a couple of years when we do see a recession, and what's going to happen to middle? You know, the left does not have a monopoly on caring about unemployment and lower income people. Conservatives have a better message on how to address that. That's why it's critical that Janet Yellen give equal time to the right of center groups like Cato, Heritage, American Principles in Action, and others. Meet with us so we can discuss our plans for future economic prosperity.
And speaking of time, Steve Lonegan, we're going to make sure you have more of it on the other side of this break to talk about our economy, what ails us, and what we do to return to the veracity of the phrase, as sound as a dollar. More with our friend Steve Lonegan coming up.